Hey, Money Marvels, welcome back to Finance with Ronke, the channel where we break down personal finance, saving, and smart investing so that everyday Nigerians can build wealth. I'm Ronke, an ex-banker, investment banker, chartered stockbroker, and my passion is simple, helping you take control of your money and make it work for you. Sterling Bank recently announced a public offer of at 7 naira per share with over 12.58 billion shares up for grabs. And a lot of people have been coming into my DM asking several questions. Is this an opportunity to grow wealth? Is the stock overpriced or underpriced? Should I buy or not buy? And in this video, I'm going to be breaking down Sterling Bank's business model, what business they are really into, how they make money, their financial performance, why the public offer is happening, and whether you should consider buying in this offer or not. So you are going to be able to take an informed decision by the end of this video. So stay with me to the end because I will share my take on who should buy now and who should not buy. So let's dive right into the video. Is Sterling Bank public offer at 7 naira a buy or not? So this is a disclaimer. The ideas and opinions shared in this video are based on my personal research and analysis. Please do your own due diligence before investing. And remember that past performance is not indicative of future results. Always consider your risk profile before making decisions. So number one, what is the business of the bank? What do they do? Before you buy any stock, the first question to ask is that what business is this company really running to? Just the same way that when you want to go into a business, maybe you want to go into oil marketing or anything, you need to understand the business that, okay, what are they into? So that is the way you also treat buying shares of the stock market. So what are they into? What business is this company running about? So this question, you need to find answers to it, and it will help you to know the type of risks the bank is exposed to and how they make the most of their money. So if is it a loan bank, is it an investment bank? And you can only get this kind of answers to this kind of question by looking at the financial statement of the bank. And you can have access to the financial statement by going on the NGS, and you have access to it. It's public because it's a public company. Financial statements are readily available to the public. So Sterling Bank, their deposits are growing steadily from 2.16 trillion in June 2024, and it grew to 2.77 trillion in June 2025. And you could see that their deposit is increasing steadily, and their loan moved from 1.09 trillion to 1.18 trillion between the period under review, that is June 2024 to June 2025. And you could see that their investment securities stood at 831 billion. And when we talk about investment securities, we are talking about their investment in treasury bills, in bonds, in other securities. So you could see that from this, but if you now look at this ratio and these figures, and you decide to do maybe the deposit to loan ratio, loan to deposit ratio, you see that it's the percentage is 43% based on the deposit they have and the loan they have. So this means they are very conservative and not aggressively lending out like some riskier banks. So it's a consistent growth. So it's telling us something about Sterling Bank, because financial statements, they tell you about the company you want to invest in. That you can see that they are keeping their risks at a minimum. They are not just overzealous with lending out money and loans out to the public. So in a simple language, you say Sterling is not a reckless lender. They are cautious, and that lowers their risks. And if you look at their investment securities, deposit ratio is about 30%. And this is giving us a balanced ratio between lending and investment. And like I said, they also, as a bank, you're also expected to invest in treasury bills. You are supposed to invest in banks, in other banks, or invest in government securities as a whole and their bonds. So you see that they have 30%, 43% to 30%. It shows that Sterling Bank is an hybrid bank. That means they are not skewed towards one aspect. You see some banks that they have their loan to deposit ratio about 70%, 80%, but theirs is just 43%. So there is an hybrid bank, is a balance, is a breed of investment banking and a loan banking. So it's an hybrid bank. So it shows strong reliance on investment returns also, not only on interest income. So the bank is not overexposed to loans and balance, and it balances its risk profile. So how is the bank making money? Their interest income went up to 167 billion from 120 billion, and the non-interest income went up to 28 billion from 20 billion. So this is still a healthy balance, showing that their comebacking remains what the main driver. So their non-interest are maybe the interest they get from maintenance, account maintenance fee, corporate finance fee, e-business, SMS alert, commission of foreign exchange deals, and all that, commissions on LC and all that. Those are the non-interest, and the interest income is the income they get from loans, traditional loans that they give out to people. So the bank is making money for its core banking operations. So you can see from that slide, and you see that their net income, their net interest income went up by 55.8%. That is from 57 billion to 97 billion. The interest operating income went up by 166%, from 88.9 billion to 142 billion. And their profit after tax also went up by it grew to 41 billion. And their EPS went from 0.56 to 0.896. In conclusion, you can say that the earnings are improving strongly, showing good efficiency, which is a very good thing. So we now look at the stock performance over time. In the last 3 months, the stock performance, the stock of Sterling Bank grew by 32%. In the last 6 months, it grew by 39%. In 12 months, it grew, that means from last year till date, it grew by 84%, which is a good one. And in 5 years, over the period of 5 years, that is looking at from 2019, 2020 to 2025, it had grown by 540%. This is showing clearly that Sterling Bank has delivered long-term results. So it is a good bank, and it has shown that they have been growing consistently. So why are they doing this public offer, you may want to ask? One of the main reasons why they are coming out to the public to offer a public offer is that they want to strengthen their capital base. You know, the CBN has mandated all the banks to increase their capital base. So they need to, because of the CBN recapitalization directive, so they need money and they want to come into the public offer. It's different from you buying up from the secondary market. When you buy from the secondary market, if you trade Sterling Bank shares of the secondary market, the money will not come to them directly. It will come to people, investors that already have the shares. So, but with this public offer, the money is coming straight to them. So another reason is to expand their digital banking, and of course, to also grow and their footprint across Nigeria and beyond. So the question is, should you buy? If you're a short-term investor, I would say buy in the open market at maybe, I think the price is currently 7.55, might be okay, but you need to watch price volatility. The current price as at the close of business of Friday was 7.55, so you can buy at that, but you might be watching at the price volatility. But if you're a long-term investor, the public offer is better, since you will you will not be paying the brokerage fees, commissions, and all those fees that are applicable with when you buy at the secondary market, and you get it at a fixed price. So that is one thing if you buy from the through the public offer. So at 7 naira per share, considering the EPS of 89 kobo, the PE ratio is about 7.9x, and is not overpriced compared to the Nigerian banking sector average. The average is between 5 to 9%, so it's just 7.9, so it's still fairly priced. And so that is one thing. So if you believe, if you believe as a long-time investor, if you believe in the stock, it looks like a solid buy, and especially if you believe in their digital and expansion strategy, I think you can decide to consider buying into the public offer. So would I buy Sterling Bank share at 7 naira? As a long-term investor, I would say yes. It is reasonable price for a bank with solid fundamentals and growth potentials. But you also need to remember that you need to do your own research and consider your risk tolerance. How long am I investing for the short term or for the long term? And you need to diversify your portfolio. You don't need to have too much of the banking stocks in your portfolio. You need to diversify. Maybe better you do asset reallocation, and then when you see, okay, there's still room for me to buy into it, then you can also buy into it. So I would like to say thank you so much for watching. I really appreciate if you have stayed till this now. Thank you for watching. And if you find this video and this breakdown useful, don't forget to like, Don't forget to share. Don't forget to subscribe this video and then share to someone who is thinking of investing in Nigerian banks. And if you have any money question and you want me to address in my next video, kindly drop it in the comment section. Remember, this is Finance with Ronke, where your money learns to work for you. Until next time, stay smart, stay consistent, and keep building wealth. Thank you.